Chapter 26, Triangles and Wedges. Now that you understand supports, resistances, and trend lines, let's look at complex trading setups you can create with these price levels and trends. Because supports, resistances, and trend lines create strong tension levels in stocks, they can produce explosive growth opportunities when they collide. In a downward wedge, a downward trend line slopes into a supportive trend line as the price stabilizes. The stock fights to break out of this upward resistance, and it usually should, as long as the support holds until the two trend lines collide at the very latest. In a long-term setup, we see early MU with a near 8-year downward wedge setup. If we look at this chart, these guys had this insanely long-term trend line that was trending down off of previous highs, and then a new high, and then another high recently, and they were just stuck in this range, and this range was very well supported by a supportive trend line, and you can see, there were bottoms on that chart for quadruple, quintuple bottom. So it was very strong on both sides. And once those two lines started to come together and almost meet, it actually broke out of the top. And then I think I'll talk about the price movement in just a minute. So long-term trendline setups can create exponential movements when the underlying company gives good news or changes public opinion to increase demand and purchasing of the stock. In this particular example, Micron Technology Inc. went from a conservative entry point of $2 when it broke out of the wedge to over $45 in less than 3 years. The chart goes straight up. I mean, that's really good. The pressure point in the market during a downward wedge setup is when a stock tests its resistance. Most players connect subsequent highs and lows instinctively to see psychological price levels, so trading volume often intensifies around these trendline boundaries. In a swing trading setup, we see Apple Inc. And notice that with this setup, it's got a solid long-term horizontal support line based off of those previous bottoms and consolidation areas, but that downward trend line that's coming into it, you don't really start to see it break out until it sort of nears the end of that triangle wedge setup, and that's what you see in Apple Inc. right here as it kind of breaks out of the downward trend line that was a triple top resistance, and after it breaks out, it just goes up. The goal with this setup is to either buy near the collision of the two trend lines at the end of the setup off the supporting trend line to get the best possible price, or get in once the stock breaks the resistance line and stays above it for a reasonable amount of time, depending on your time frame. In long-term investments, this can mean a week. In 9 to noon trading, it could mean 2 seconds. Where you enter and how quickly you enter a position depends on your risk management and personal trading style development. As long as you set respectable stop losses, you can limit your losses while your winners soar. The key to getting triangle setups right is finding the right trend lines to use for analysis. This skill simply comes with practice. Try to identify a few trend lines in current stock price movements in some of your favorite corporation stocks and see how you do. With time, you will get the hang of it. Then you can progress to more aggressive order entry points. This mindset holds true for most technical analysis. Opposed to bullish downward wedges, bearish upward wedges form when a supporting trend line runs into a resistance. Stocks trend in the wedge until they stumble along the lower resistance and eventually fall out of the setup. Let's look at a 9 to noon example of an upward wedge on Ideal Pharmaceuticals Inc. And with this setup, we see a top line resistance that was created with about 4 or 5 tops. And then there's a diagonal upward supporting trend line that's running into that resistance line. And it's established by about 4 or 5, 6, 7, 8 consecutive bottoms in an upward wedge setup after the pre-market gain and the daily rise. And it was also established a little bit yesterday with consolidation after that market opening. Note that this chart showed 2 trading mornings, and you see in the chart after it breaks outside of that resistance, or after that support trend line in the upward wedge, it settles down for the rest of the day and just keeps going down because it's out of the wedge, it's down setup. In a normal trading morning, you could potentially make 2 or more great trades off this chart. First, you could buy off the quick rising support around 420 and sell at the stable resistance around 480. As you get more comfortable with trading, you'll learn to quickly identify supports and resistances to jump quickly into high momentum upward swinging trades. The key is to outline your parameters in a trade or identify the market sentiment early on. This particular stock had an excessive pre-market gain and worked in the first 10 minutes of the day to break its previous high of day. If you realize that, you may jump in slowly in the first 5 minutes to take advantage of the first run up or perhaps the first pullback to beneath the VWAP. VWAP not shown. It's around 440, so you could predict the first supportive bottom based on the VWAP consolidation, or even just buy the VWAP and sell it at the third peak. We'll talk more about VWAP in chapter 33 since it is such a powerful indicator for 9-day trading. As for the downward wedge short, your initial entry point once again depends on your risk tolerance. You could short ADIL immediately once it starts consolidating outside of its support, or you could wait for it to crash through the VWAP at 442 and before sending in a short order. Nonetheless, the upward wedge holds true. Let's look at one more example with longer term trading. Here we see an upward wedge with Lamentum Holdings Inc. And then with this chart, you're looking at an upper resistance line based off of four tops and then a good consolidation phase where it broke, but then it couldn't break. And at the same time, you have this longer term, this is a 2-year chart, support line that's trending upwards based on consolidation and previous price bottoms. And the price bottoms, it's like 4 or 5 of those. Those are what are really going to establish this trend line. And because it's an upward wedge, you see this breakout and it drops below it. And once it drops below it, it just tanks down. And there's a huge red volume candle because everyone freaking sells it. The goal with an upward wedge like light is to short at the upper resistance towards the end of the wedge. This minimizes your risk since you can stop out of the trade if it raises significantly enough to break the wedge pattern while simultaneously minimizing your time exposed in a trade. You can best determine entry points by looking once again at your high to high trend lines and comparing them with low to low trend lines while considering consolidation areas. Not all lines are perfect, as shown by LITE's slight deviation from the support and resistance levels, but these lines serve as almost perfect uptrend, downtrend, and eventually sell-off indication levels. With shorter term setups, expect tighter trend lines and wedges that deviate outside of trends slightly less because active traders are much less affected by macro market movements. In upward and downward wedges, your price target is determined by the wedge run-up before the breakout. You can expect wedges to reverse the same amount as its initial height, as shown in the following charts. And then we see in the first chart, we have a downward wedge with an initial height of $11.39 from the support to the top of the beginning of the resistance trend line. So when you buy the breakout, you added the same price, $11.39, to the breakout point as your target price. Similarly, for a downward or an upward wedge, we have an initial wedge height of $3 from the first point on the resistance trend line to the first point on the support trend line. So once it breaks out of the support trend line, we set our stop loss. Yeah, so it shows the stop loss price. It's really just outside of where the maximum resistance or support level is on the exterior bands. But again, you just subtract that $3 price from the breakout level, and that's where you have your expected profit target. You can improve your order discipline by consistency by using systematic profit targets and stop loss levels. In combination with support and resistance levels, your wedge setups targets can help you find the best places to buy and sell while maintaining calculated risks and strong risk-reward ratios, again, which is with stop losses. Lastly, we get to the symmetrical triangle wherein two trend lines converge at a single point with no definite direction. Here's an example with Visa Inc. And then we see a chart where you have an upward trend line and a downward trend line, and it's not really an upward or downward wedge because it's pretty symmetrical. So with a setup like this, besides looking at Bollinger Bands, we'll talk about later, and those setups, you really want to see where that first breakout is and then follow that. So the trick with symmetrical triangles that show little direction is to wait for the initial breakout. After the price first breaks out of the supportive or resistive trend line, the market will usually follow the given trend. Reversals are rare because the previous support becomes a new resistance and the previous resistance becomes a new support. However, in the case of a false breakout and reversal, the reversed movement generally reflects true market sentiment about the underlying stock and will cause a strong movement towards the corrected direction despite the initial breakout. In other words, if the market changes its mind, it generally stays with its new decision. As for your expected minimum price target, use the same logic in the range in the previous example, wherein you look at the range of the first run-up and the trend range and add or subtract that amount from the breakout point. So with Visa, you just look at the chart and you'd look at where it first came into the wedge to where it had that first peak in the resistance trend line. Here's one more example of a symmetrical triangle pattern with ripple. And then we see a long-term downward resistance coupled with a pretty good term support trend line going up, and they both kind of have about the same slope, just mimicking each other, so one's up, one's down. No definite direction here, so you wait for the breakout. Once it breaks out on the negative side, that's when you would short, and over the next time frame, it was consistent, just followed through and kept going down. XRP's volume significantly increases at the breakout point, signifying a psychological sentiment shift from the symmetrical pattern. The goal with the symmetrical triangles is to get in once you see an undeniable breakout direction toward the end of the triangle. As the market nears the convergence point of the support and resistance, it must decide which direction to move. Because this judgment moves often occurs quickly, you can prepare your limit order right at the edge of a trend line, or use a market order to get in a position rapidly. Use your judgment based on the time frame. Shorter time frames such as 1-minute candles will generally move faster than daily candles, and bid-ask spread to decide if a market order that risks a quality fill is necessary.